We've finally broken Peter down, and he's decided to wear something not so nice looking. Good branding. I want to be careful how I put it, but you look like a real hobo today.
Peter. Yeah, I do. Back in the shed, fully grown beard, trying to stay warm. Yeah.
Let's see the sweatshirt real quick. You're a little too low. I can't see it. Oh, beautiful.
Yeah, nice. Everybody's got tassels on. That
is a nice one. I like that green as well.
Yeah. When are we making CJ's deal? When is he going to get onto the show?
Oh yeah, we should. The reason that I actually wore this today is because I was just texting with him, and I said, I should throw this on for the show.
So got a partnership with Nike as well.
I guess
with Nike. So guys, I was driving up today from Norfolk to Yorkshire via a place Doug knows well, Lincolnshire. And on the radio, there was a question that made me think, I'm interested in your answers. It was, if you had to watch just one TV show for the rest of your life, you're locked away, you can't see anything else, you can only see one, what TV show would you pick? I was interested in your answers.
Ooh, well, we just recently had some LinkedIn chatter about Top Gear, comparing our really poor performance with Top Gear's trio. So whether it's Top Gear or the Grand Tour, I don't know. I feel like that might be one of my answers because they're quite entertaining.
Yeah, lots of episodes as well. So.
Yeah. You're gonna want something with quite a few seasons. It can't be a sitcom. I just don't think I could handle that all the time.
You don't want to watch Friends in perpetuity?
No, I'm good.
I really like Dark, that German time travel series. Very good.
Is it in German?
It's in German. Yeah, it is in German. Yeah. I mean, they have
subtitles. Fluent in German by the end as well, which would be
learn German.
That's nice.
Yeah, my son and I are working on our German skills. Nice. We're only at Danke and Worst, but I feel like that's all you need. Yeah. Somebody gives you a sausage and you say thank you.
Thanks for the sausage. Yeah, exactly.
Yeah. And beer, which is the same. Just spelling's different.
That works.
Peter, you? Listen, this is. Oh yeah, Peter. Sorry. What's yours?
I think I'm with Dylan, and you got to go for something with a lot of episodes. So I was kind of thinking it'd be nice to rewatch The Walking Dead or Breaking Bad, but you'd probably get a bit bored of that. So one series that I haven't seen that everyone recommends, so I'd just be keen to watch it to see it, would be West Wing. I've never seen it. So.
West Wing is good. Yeah, back in the day, I would watch that.
Not The Wire, Peter.
I know, but all the British sitcoms, like you said, have got such Faulty Towers. This is not that many episodes to go. I'd love to watch it, but you go crazy.
Only Fools and Horses.
Love Faulty Towers.
Only Fools and Horses. There's a lot
Only
of
Fools and Horses is brilliant as well. Yeah,
I've actually never heard of that one. I don't know that one.
Oh, it's great. Okay. Rodney.
Okay.
Always doing money-making schemes, Dylan. You'd like it. Yeah.
So I guess that brings us to, should we be really looking at Silicon Valley, Billions, whatever, that type of that show with this group of people and who we talk to regularly?
Maybe. I have a post coming out. One of my favorite scenes in Silicon Valley is when he's having a drink with a buddy who raised too much money, basically went through a down round, lost his house, lost his girlfriend, lost his company, everything. We're going to see a lot of that coming up. So that post might be on replay on LinkedIn as I egg people on. We've had a couple of frothy raises this week. We won't name names, but I have thoughts on some of them.
Doug, just a hater.
Not a hater.
These guys are going to be all of them are going to be successful, have amazing multi-billion-dollar exits.
Yeah. You know who is going to be successful and has raised some nice money? The guest that we have on today.
Oh, nice. Yeah. Very nice.
You like that segue?
Nice segue.
That was well done.
I'm gonna pause it.
Almost professional.
We're not ready. We're not ready for them to come on yet. Dylan, you weren't going to ask about my sweatshirt, what I have on?
Let's see it.
I'm not going to show you, but it's Multiply.
Okay.
I wonder how they're doing. Like that crack crew of investors over there at Multiply. Should we get them to sponsor a show?
Sounds great. Let's
Yeah.
have them on.
Right. Yeah. Ooh, that'd be good. All right. Well, we got we're really just treading water here, guys. Listener times 4. I think we have 4 listeners now.
I'm interested for this one because I'm not sure you two know, and myself actually, a huge amount of background on this guest. So it'd be.
I do.
Awesome
I've
to
had the
discover that
pleasure
story.
of meeting Patrick a few times.
Oh,
I love the
fantastic.
product.
Okay.
I love the market.
You know everyone. Yeah.
It's through Dylan mostly that I know. People.
Yeah. No.
Yeah.
Doug the socialite.
All right. I think we're ready to go here. Guys, it's not often that we run out of things to say. Mostly we could just like chit chat amongst ourselves forever. But why don't we get a couple of real crack experts on, talk about what they're working on.
Sounds great.
Let's do it.
All right. Steven, Patrick, guys, thanks for.
Hey, how are you?
Yeah.
Thanks for joining us.
Doing well, guys. You are listening in on a little bit of our coffee talk that we like to do before the show.
Perfect. Well, I got my coffee here. Still morning in Nashville.
Yeah. You guys dealing with some weather right now.
Yes. Yeah, I was living an insurance case study here. I think we had a big ice storm about a week, 10 days ago, and I grew up in Minneapolis and never experienced a storm like this. That just kind of derailed the city. We were out of power about 8 nights. So with 3, little kids and 10-degree temperatures, it was a challenge. We had a place to go, some neighbors, which was helpful, but it was a long week, and I think it's probably going to be a couple more weeks before they can get it cleaned up here.
That's so
crazy stuff.
Yeah. I mean, I guess the city's just not built for it, but
yeah, I mean, it's kind of like all these southern cities, right? You don't have the salt trucks, you don't have people that know how to drive in this. You've got kind of these old trees that can't absorb a lot of additional weight from ice, and then you just had temperatures that we don't usually see. So it was a kind of a perfect storm, so to speak.
Yeah. I don't think we did enough prep for you, Patrick.
Oh, that's all right. I got Steven to do the prep for me, so we're good here, and obviously familiar with what you guys are doing. And Peter, good to see you again. I know we were on a panel a couple weeks ago. Yeah. So excited to share our story and jam for a bit with you guys.
Cool.
So Patrick, first question for me: what took you from Minneapolis to Memphis?
Nashville. Yeah. So it was a kind of a long journey through a couple of great cities. So grew up in Minneapolis, which is actually forms kind of a key part of the district cover story, which we can get into. But went away to college, and then after college, just kind of became enchanted with moving to a big city. It actually happened when I was studying abroad in London, Peter, for a bit of time. I wasn't even thinking about insurance. I was just like, I got to find an internship in New York City. And insurance sort of fell into my lap through a family connection, which is, I think, how a lot of folks get into this. So moved to New York, joined Guy Carpenter on the reinsurance brokerage side, spent 8 years there and absolutely loved it. Made a ton of great relationships in the industry. Really learned how kind of large corporate insurers work. Got experience sort of on the MGA side, and then jumped over to a startup insurance company, Hamilton Insurance Group. I was sort of GMing a small business admitted product that we were trying to build. We ultimately spun that business out. And that was called Attune. And I, as we were doing that, personal reasons sort of took us out of New York, and Nashville was a kind of a comfortable in between Minneapolis and Atlanta, where my wife's from. And the city was sort of on the kind of up and up in 2017. And in my role, sort of leading all of distribution and business development, I was traveling a bunch. So being sort of centrally located helped. So we made the move, and we've been here. It'll be 9 years in February, and it's a great place. Great place to raise kids. A lot of similarities to where I grew up in the Midwest, but similarly, my wife's from the South, and we've got now kind of a multiple sisters and family here. So we've kind of got a big crew that's sort of taken over the city.
Nice. I knew you were a tune, Patrick. I didn't realize you were a Guy Carpenter. We're former Marsh comrades.
Yeah. I was right there in 1166, Avenue of the Americas. Actually, we started. Guy Carpenter was actually in kind of that old Credit Suisse One Madison building when I started, and then we had to move to 1166. But yeah, I did 8 years there across a ton of different sort of disciplines, a lot of property cat. But we did a lot of stuff with Marsh, actually, especially towards the back half. I think that the broader operating companies, whether it's Mercer, Oliver Wyman, there was an effort to really do a lot more collaboration. And actually the project that I worked on that led me to Attune was working with Two Sigma when they wanted to create an insurance venture, and they sort of hired all of MMC to kind of help them think through that. And we did a lot with Marsh. Yeah. Were you in New York too?
Yeah, I was on 23rd floor.
All right.
I was on legal, but Guy Carpenter, Mercer, all the legal functions were kind of jammed into one place. We did very poorly, but
the classic shared services there. No, it was foundational, really. I think joining a company kind of that size with the resources and sort of the breadth of the whole insurance spectrum, I think shaped me a lot for sort of how I wanted to think about, this venture and building capacity and the importance of that. And, we probably passed each other in the elevators or at the Park Deli there a lot of times.
Yeah. Let's get into what you're building at District Cover, because I think it's super cool. I've heard the story a couple of times now, and I know early stage it's always somewhat evolving, but I think the niche that you guys are going into and attacking here first is very much products are needed for this space, obviously. Curious to hear like what you're doing, maybe how you got into it, how you identified this.
Yeah, no, absolutely. We as I kind of thought about starting an MGA, right? You sort of, at a high level, you have to sort of look at the economics, right? And an MGA generally is kind of adding cost, right, to the chain, right? So generally, my view has sort of been, you as an MGA, you sort of have to do one of two things to make it work, and the really good ones sort of do both. You have to have sort of unique distribution, right? That allows you to maybe find synergies there that kind of drive down cost of acquisition, or you have to really be bringing a product to market that truly is not a commodity, right? So where is there sort of, supply and demand imbalance? Where can you use, data and analytics or different underwriting approaches to do something profitably that others have sort of historically said you can't do profitably? I loved kind of the small commercial middle market space, and was trying to think about places within that, sort of segment where there was less, supply, frankly, but a lot of demand, and a lot of demand that had sort of historically not had a great solution, or had sort of carriers or platforms that were in and out of markets. And the one I just kept coming back to time and time again was sort of the city. And then particularly within a city, neighborhoods that, people that aren't from the neighborhood, or, sort of have a headline view or a broad sort of view would say, that's not a place I want to sell insurance. Right. And their opinion could be supported by attempts to do it before or historical data. And oftentimes those areas are, higher crime, older buildings, very dense, generally more on the lower income spectrum, although that can vary. And just time and time again, you see countless examples of these neighborhoods not having a great solution for their insurance. And the one that I mentioned Minneapolis earlier. The one that really kind of speaks to this is what happened in Minneapolis in 2020, right? So you have a major thoroughfare, kind of South Minneapolis, in the headlines again recently, kind of the exact same place. So far, slightly different outcomes, thankfully. But you had post George Floyd, a lot of civil commotion, riot, vandalism, destruction in a part of the city that a lot of folks, small businesses, family businesses didn't have a great insurance solution. So you had a $500 million economic loss, and you had basically a $200 million, give or take, insurance recovery on that. So you look at that, I look at that and sort of say that is just too big of a gap for, frankly, a major market, a peril that we sort of do understand. I mean, at its core, this was property damage. It wasn't cyber 25 years ago. This wasn't sort of a market that was, looking at new micro insurance where you have these huge gaps. This is a major thoroughfare. And I just thought we could do better, right? And I started to really think about like, why did that neighborhood not have great insurance? And carriers had left. Customers were being charged more than they could afford, so they were underinsuring themselves. Some businesses couldn't find the right agents, didn't speak the language, didn't know how to protect their business, hadn't had sort of a basic risk management training, and sort of said, okay, you've got a sort of a social problem here, right? That the industry is well suited to solve. And then you've got this kind of business market problem, which is that supply and demand imbalance that I talked about earlier. And I said, hey, here we go. This is where the two things align. And obviously it was a personal passion given where it was happening. And we said that was, let's start an MGA and a platform to focus exclusively on that problem. Then we started to think, okay, how can we do it? Which was another, the next piece of the story. But that's really how it came to be.
That's amazing. I have probably a step back question, Patrick, on that. So the type of insurance you're giving there, are you paying much attention to the kind of macro trends of cities? Because one of the things I've noticed from visiting, I had the great fortune to visit some diverse collection of cities in the States over the last 5 years or so. One thing that stood out to me, for example, when I visited Minneapolis and spent some time in St. Paul, was the kind of move away from the city center of cities. And I just wondered how much, obviously you're very data focused in what you're looking at and things like that, what your take is in general about the changing dynamics of American cities right now.
Yeah, and absolutely. And it is something that, we look at not only from is the size of the market or the opportunity evolving, but also the risk profiles are changing, right? And we sort of think about both. You are definitely, when we were starting the company, there was a little bit of a migration out of cities. I think it was mostly tied to COVID, frankly, more so than other factors that got some headlines. But you're starting to see that swing back the other way again, a bit. Now, you still are always going to have the challenges of the cost, right, to live in some of these places. And it's, magnified in places like New York City, right, and Los Angeles, which are two of our biggest markets. But yeah, no, we are still obviously very bullish. I think the areas we are targeting have seen less migration than others. And, really it's actually presented an opportunity, right? So if you think about, even since we started this business and went to market in 2024, when I had the idea in sort of 2022 and we incorporated and started the journey, the risk profile of this, it's just even changed since then. So if you think about, like, take Los Angeles, for example, when we started the company, we would have never really considered LA to be a wildfire zone, right? Like the wildfires were happening on the outskirts of LA, towards the hills, towards Malibu and places like that. But, Santa Monica, West Hollywood, those weren't places that you would have assumed wildfire would be something you'd have to underwrite in kind of an urban setting. Well, that changed. Fast forward a year or so after that, and you've got parts of downtown LA that are effectively shut down by the city saying, we're going to put a curfew in because of the protests that were happening as a result of ICE and other things going on there. and then you've got some businesses that are like, I was supposed to be open till midnight. I now have to close at 6. My income's going down. Where's my BI coverage for this, right? So all this coming off of COVID, which was something we didn't really understand. So it's constant. The city is very unique in terms of the constant evolution of the risk profile. And frankly, we view that as opportunity because a lot of folks will leave, right? The headline risk pushes people out, which creates, potentially a bigger challenge, but also more opportunity for us. And that's the beauty too of why we're doing this on an E&S basis, so we can be flexible, evolve what coverages we're providing, respond differently to the market. But no, it's constantly, changing, which it actually makes it kind of more exciting.
Patrick, I'm going to ask a question here that I don't mean rude in any way. I just need to preface this, but I need to understand. I get the idea of opportunity where other people leave a market, so I fully understand. But I've got to hear what your pitch was to carriers, to your capacity providers that said, hey, I want to go almost exclusively into judicial hellholes and deal with a series of risks that are really challenging. That's a bold thing to come to bring to this to the capacity providers. I got to hear how you were how you were pitching this because that's a tricky one.
Yeah, it took a while, and you could argue whether we were doing it well for or not, right, for a long period of time. But it took a long time, and also we were facing headwinds around, the property market was extremely hard. People were not giving out aggregate. We needed property capacity. That's a huge part of what we're trying to do. You mentioned the judicial hellholes on the liability side, but which is important, but the property too. And then you had just InsurTech V1 that had sort of a, particularly on the MGA capacity side, I think had sort of burned some balance sheets, right? Or certainly didn't perform up to snuff and expectations. So, there was a lot of, Dylan, hey, great, noble concept. We wish you luck. Like, give it your best. But come back in 5 years when you have triangles and you can show me how you're doing it. But no, it was hard. I mean, we ended up in a great spot with capacity providers. Vantage Risk is our lead carrier right now. Greenlight Re is supporting them. Both made an investment in our business. And really we sort of had to, present how we were going to do it differently. So we didn't hide from the fact we put the historical data on the board that showed the zip codes that we wanted to write in had performed worse. Right. So we said, we recognize this. And it was about 10 points worse historical loss ratio performance in the areas we wanted to write in versus those that were kind of where everybody wanted to write. And we said, okay, here's how we're going to tackle that. Right. So this is the risk from fire that's driving that loss ratio. Here's our sort of response to how we are going to manage the fire risk. Right, and identify where that risk is most prevalent and manage the book accordingly. Here's the crime risk, right? There's the headline crime that you see, and then here is effectively all of the crimes that are happening in our predictive model that we built based on historical crime data that was hard to work with. We had, millions and millions and millions of publicly available crime data that we, located down to the, address level, the occupancy type, projected whether there would be an insurance loss on that. And we sort of showed people like, this is what you think is real. This is what actual data suggests. And when you start to look at that, if you take crime as an example, 70% of the crimes happen in about 30% of the blocks, right, in our cities. This is why things like hotspot policing, while potentially controversial, exists, right? Because it's like, where these things are going to happen and they don't move around a ton. So we just started to really present that and say, okay, this is how we're underwriting and pricing for that. And then we said, this is what we're doing on the GL side, right? And we just went peril by peril. And look, people are taking a bit of a leap of faith, right? So one of my lessons for folks is, you do have to go into this sort of saying, this is what we believe, but we don't know for sure. Obviously, we back tested some of this against historical claims data that we were able to get. But, how do you sort of avoid blowing yourself up while you sort of test the model, right? So that's volatility management, limits management. We didn't launch with a ton of need for catastrophe, coastal wind capacity. We've added that since, but we didn't start there. So it was really sort of pitching it and saying, this is what we believe. This is the thesis. It's going to take a little time to prove it out. We're still proving it out. While we do that, we're not going to try to go take on all this other risk that amplifies, what we're doing. So if we get it wrong, hopefully that getting it wrong is on the margin and not taking down a company. And then the last thing is, I think you have to really just lean into the mission, right? Like, it doesn't excuse everything. We're not a nonprofit. We can't, give people insurance for free or at a price that isn't supported by the actual risk. But we just talk about why we're doing this. This is what we're focused on. And this is, we believe with true focus, with the right data and analytics at a hyper granular level, it can be done. But it took a long time. I mean, I'm not going to lie. It was, and we didn't use a broker. I was kind of maybe naive in saying, well, I was a broker for 8 years. I can build a panel, and we got there. But it was tough. So I credit my partners for taking the leap. They're awesome. They still are. And it's been a good ride since we went live.
Nice.
That's probably one of the best succinct explanations I've heard of a product. Also, Patrick, I think what you're doing is exactly what an MGA is meant to be used for, right? This concept, and especially like a tech-enabled MGA, you're able to dig down into a risk that just a larger carrier doesn't make sense for them to do so for a number of reasons, right? Mm-hmm. Whether they want to spend the time there or not, I think you're able to turn over those stones in a cost-effective way and find those pockets that make sense for you to go into. I'm curious on, like, from a loss control perspective or risk management perspective. So are there things you're doing there as well that maybe allow you to take some of these quote unquote gambles that others wouldn't be willing to do because you can, I don't know, like you have customers that are more willing to, policyholders that are more willing to do risk management things. What around there are you doing, I guess? Yeah, absolutely. Great question. And I think we're in our journey on this as well. But we do believe that first and foremost, the loss control side is not meant to be a gotcha exercise, get off the risk, right? It's very much meant to be, whether that's an inspection, whether that's pre-underwriting, whether that's referrals. We've had instances where there's been like a pre-inspection, right, before you would bind a risk. And it's all under this premise of like, how do we make you more insurable and more profitable? It's not oh my gosh, I don't want to write this. We're trying to get to a yes. And what you find in a lot of these areas, frankly, and it's because there aren't as many agents. Agents are already, as we all know, don't have a ton of time to be sitting down and coaching people that aren't familiar with insurance and some risk management concepts. We just have to help that process. So we're doing a couple of things. We are, working hard to sort of create a library of information that can help, a first-time business owner, a first-time insurance buyer, someone who's had a claim and is now trying to figure out what to do next. Just some basic sort of coaching and materials that they can leverage to make themselves, a better risk. And the reality is there's probably, 5 to 10 things that are super important for them to do, depending on what their business is. And if they understand those, that's a win, right? We've sort of increased the bar of insurability. And then the inspection process, which we are doing, on a large portion of our portfolio in partnership with our brokers, is again really meant to point out like, hey, these are the challenges that we see. Here's what you can do to help remedy them. We aren't at this stage sort of paying for them to do that. I think that's something that as we start to develop more income, we've been thinking about how can we put some, dollars back into these businesses. But it's really meant to be like, here's the blueprint of things that we saw that you should fix. And then it's follow up. It's, hey, did you do this? There's timing associated with that. Some are immediate, we got to fix this. Some are longer term. Let's check in at renewal. But the other piece is really helping our agents sort of do that too, right? A lot of agents have
just not had time to focus on these areas either. So a lot of our early day learnings were, we got to help them figure out how to go in and sell here and talk and educate. So it's a kind of a two-pronged approach where there's some stuff we can do, but there's some stuff that we have to help our agent do because they have the relationship and have built that level of trust that we haven't earned yet.
Patrick, real quick, and you may have said this a little earlier, I may have just not caught it, but is this, are you going directly to the retailers, or you do have a wholesaler in between you and the retailer?
Yeah, we're working. It's a little bit of a hybrid. I mean, most of our approach is through wholesalers. Some of our offerings through wholesalers enable retailers to sort of interact with the product directly, sort of under the supervision and support of the wholesaler. At the end of the day, like we're fairly agnostic to how these businesses get their insurance, right? We have some models where we're partnering with a broker and a city, right? So we're working in the city of Oakland right now. Oakland had identified a challenge. Landlords kept coming to the city, lenders, businesses, and saying like, we can't get the insurance we need for certain neighborhoods in our city and certain specific classes of business within those cities. So we sort of worked with a couple of brokers to develop a solution there. And now we're sort of enabling them to proactively go out and market to businesses that have raised their hand and have told the city we need help. And we're doing that, through a retail and wholesale kind of combination partnership. So we have a different, the technology is flexible. We are, certainly flexible. Growing up kind of through the distribution chain, we're certainly mindful of channel conflict and things like that and trying to manage it. But at the end of the day, like the goal, and I think everyone shares it, is like, how do we get more of these neighborhoods and the businesses in them insurance? And it's the channel conflict conversation pretty easy when the wholesaler or retailer has sort of said, I never really wrote there anyways. Right. Yeah. So it's kind of a net new market for everyone. And that Dylan, that was actually another pitch I should have mentioned to the carriers, right? It's sort of like, hey, like this is a net new growth opportunity, right? You could go get behind, get in line at, XYZ wholesaler and be another binding market for them. Or we can kind of go here and try to sort of unlock a new market that really is extremely fragmented and no one is doing particularly well.
Yeah. So you've got kind of a few levers to deal with, right? When you're trying to manage the risk, because I think you used the term managing the risk when I asked you the highly offensive question. And so I guess there's rate, right? Because there's a premium for every risk is the saying.
Mm-hmm.
Right? There's forms, which is restrictions. And then you have data to determine what if to essentially make better decisions on risk.
Yeah.
How much of those levers are being in play here? I mean, obviously you're a surplus, product. So with that, you have a big option on both the rate and also the restricted forms. How much are you using those versus the data?
Yeah, it all works together. I mean, it's super interesting. So if I go back to that Minneapolis example at the start from 2020, the vast majority of those businesses had insurance, but they weren't insured to the proper value. And the reason for that is because they were paying that high price that, they said, oh, I can't insure it to that amount of money. I can't afford that. So I'm going to cut my limits, and their agent supported that. Others just had some exclusions, right? That the circumstance led them to not be able to get recoveries. So we thought about that a lot when we were building kind of the business, and we still do today. There's sort of, I'd say, a couple different like pockets of how we would show up, right? So there's areas where there's very, very little competition, where just showing up with something is helpful. Right. And the vast majority of the time, we're able to get sort of the rate that we would need that can sort of support that risk. Right. And it's at a level that so far the buyers are saying, OK, yes, we want that. The second element is businesses that are buying insurance that maybe we can get them to because we are taking a more granular approach and have a more nuanced rate, we can maybe get them into the right insurance product, right? So we can get them from, actual cash value policy to replacement cost policy at a price point that makes sense, right? Or, we can introduce, a water deductible that helps them on the pricing side if they've maybe had a water claim before and have remedied that and now know what to do. Okay, well, let's also double down on that, throw a deductible on it to sort of, you can eat your cooking there and sort of bet on yourself that you fix that issue and save some money. So, we're also trying to tackle this of like, how do we get these businesses into the right insurance, even if they had it before? And then the third is just like the net new buyer. How do we get somebody that, they're, again, in that Minneapolis, there were people who just didn't buy insurance. How do we get to them, right? And that may be a very simple product. We have some ideas on how to even think about other things in the future. Like, I've often thought like, when we get our benefits for our employees, there's like, here's the high deductible plan. You're just an individual, you don't have kids or whatever. And here's the, the other plan. Can we create sort of an insurance product like that, where it's like, you're a first time buyer, you've got 3 things that could blow up your business, but you can't afford to, spend a ton of money, but like, here's like a CAT program for you, right? The equivalent plan. And we're not doing a ton of that yet. We're introducing some concepts, but I think that all these things need to work together. And fundamentally, like at the end of the day, like it shows up in your conversion rates, like, right? If you're extremely expensive, your conversion probably will be low. And if you're really cheap, it might be high. And we're kind of constantly looking at, well, what's our actual premium to what the model says? And you want that to kind of, in the aggregate be around sort of equal. But there'll be places where we'll say, all right, we want to go grow here. We want to write here. We like this class. Let's be more aggressive. And then maybe over here, it's like, oh, we got to kind of dial. There's this portfolio management element that shows up too.
You alluded to it there, Patrick, but in terms of key metrics, key numbers that you as an MGA founder are looking at, and if someone asks you X, Y, and Z, you'll know it straight away every day and you're looking at it. What are some of those that stand out?
Yeah, I mean, we look at, there's a couple for us that are super important. I mean, we're still early in the journey. We keep telling ourselves that, and I think it's true, especially as back to kind of Peter, that comment about the risk profiles are even evolving as we go. But look, V1 is like, we've got to generate demand, right? So we are really focused on top of funnel still, right? Are we getting enough at bats? And if we're getting at bats, but we're not converting, okay, well, that's a better problem than we have no at bats, right? So right now we're still laser focused on, are we getting the word out there? Are brokers figuring out that we have something net new for them? And then we look at like, where is it, is that business coming from, right? So we are really, really focused on how do we get more business into the areas that we truly built the company for, right? We write all over. We write, suburban America. We write rural. We write border towns, and border towns have been super interesting because they have a lot of similarities to sort of more distressed city zip codes. But how do we sort of drive like where that business is coming from? So that's another metric that we look at. We're looking at loss ratio. We're 18 months in, knock on wood. It's been a really, really strong. We think we're proving out the thesis, and that's been helpful. I think it's, I've been around businesses where it's like loss ratio is only the most important thing, like once it's a thing, right? But we sort of took a different approach and said like, well, let's not let it become a thing, right? So, I was at something the other day that really resonated where someone said like, don't let issues become events, right? So we're looking at claims frequency, even if we're not paying them out and thinking about, okay, how does this, what does this mean for the, I think it's important to ask yourself like, well, why are we winning versus, know why you're growing, why people are using you. So those are all kind of important metrics. And then look, we're starting to think more about efficiency metrics too. Right. So a big part of our business we mentioned was the granular data and analytics, but it's also how do you use the technology to make humans more efficient? We don't believe a lot of what we're writing can go right straight through the box with no intervention. So how do you then do some of what we talked about, loss control, referral? How do you do that at scale and efficiency? So we're looking at efficiency metrics as well.
Yeah.
Patrick, anytime loss ratio comes up, we have to ask this question. It's in our contracts, the three of us with the show. Is your loss ratio higher or lower than 3%?
Higher or lower than 3? It is higher.
Okay.
But
then I'm sorry. It's like you're not
Doug is
succeeding.
referencing an old tweet, and it was 2%, not 3%, Doug.
Yeah.
2%. There's a couple clowns, knuckleheads in that first wave of MGAs that weren't in the space that love to talk about their 2% loss ratio.
Yeah. My answer, if someone on our team came and said, and we've joked about this, but it's true. It's like if they came and they said we have a 2% loss ratio, I'd say, well, no one told you needed that. We said you could write to a 50 and we could have a lot more premium if you actually wrote to a 50, right? So there is a balance there, but no, we're ahead of the game in plan, but we're not naive. Like we know things can change on a dime. Thankfully, we're past hurricane season now for a bit, but you would have thought what I lived through last week in Nashville. I mean, there'll be some losses on that for sure.
Yeah. You mentioned the city of Oakland kind of working with you. Are you seeing support from other economic development councils, whether it's like lending or grants for these businesses? Because there's a lot of urban areas that they have been cored out. There's other issues that are going on in a lot of cities, and I think there's obviously investment dollars that can be spent, and that some of that's like leftover COVID money, whatever it is. There seems to be money available for economic development. Are you seeing some of that earmarked for insurance to say, listen, like, we'll help you get the loan to get the property and the operating loan, but also some of this is needed for insurance, and it's protecting the rest of what we're putting in from a grant or investment perspective from state tax dollars, municipal tax dollars.
Yeah, we're seeing more interest there. That is something that we are trying to lean into and help drive that up higher. I think a lot of it is being driven, Doug, just by insurance wasn't on the list, right? For many of these governments, lenders will ensure that the building owner has insurance, but they're not always looking a step down of the tenants, right? So there's a ton of opportunity there and the cross sell, as we all know. I mean, working at MMC, that Marsh and Mercer aren't cross-selling. They should be, but they don't. But we are seeing some. I think what's driving it is things like the wildfires in LA, right? So when it shows up in a somewhat unexpected, you could argue whether that was it, but at that size of event, that was unexpected in frequency. In terms of number of impacted sort of properties at the same time, that's where it starts to show up, right? And when the government's having to cut checks, or the state fund is, having to recap, or the private insurance market is having to cut checks because the state fund doesn't have any more money, that's when it becomes a thing, right? So we're starting to see that pop up, more and more. And there are a ton of opportunities, we think, for more collaboration between the private market and the public market, right? So you're seeing some of that happen in terms of depopulation efforts. In places like, there's new legislation in Florida about creating a clearinghouse for commercial lines in the similar fashion of what they have on the homeowner side with Citizens. There's pressure for California to start offering coverage beyond just fire protection within the FAIR Plan. You have the Oakland example we mentioned. There's other cities that are looking at that. In New York City, you've got captive. There's been groups of housing, apartment, particularly lower income housing, that are pulling together and created a captive insurance company to help them drive down their costs. So as insurance costs have been going up, as you have this frequency of events and severity of events taking place in places that, hadn't experienced it, it's becoming, there's a lot of momentum around it, right? That the challenge is this pace at which you can sort of get things done, right? So, and it's not a knock on, this isn't meant to sort of, it'd be a different podcast and conversation about how government could work more efficiently, but it's just tough. It's tough, right? This is not, how do you incentivize this? How do you sort of move this up the list of all the hundreds of things that people have to deal with? And insurance is sort of a foreign language to everyone, right? We work in it and we don't understand everything. So it's been a challenge, but I do think we need a few wins, right? So the way we're kind of looking at it is like, let's try to do Oakland well. And then if that works, let's take that example to Los Angeles and Detroit and Philadelphia and New York City and start to sort of replicate and say, hey, here's some things that we think help. And look, we don't have to like write if we can just help kind of enable it, right? I often say like, if through our success, we can convince some of these great carriers to come into these neighborhoods, like that's a win, right? That'll drive down costs. We then have to think about, okay, well, how do we monetize our kind of position there? And we have a lot of ideas to do that. But we just want to help, incremental progress is progress. And if we can help move the ball forward, we're all in.
We need to get more people like Dylan on state legislatures. I think the insurance guys.
We do talk politics a fair bit, and I'm not sure how much.
I don't think I can be elected. I'm unelectable.
I'm trying to.
You never know. You never know.
Trying to figure out how to mute Dylan's microphone here whenever bureaucratic chat comes up because he has some opinions. Patrick, you've talked a little bit about the tech. From a analytics perspective, and I think efficiency perspective, but like anything you're willing to share there, I think it's always interesting to hear how people are putting these programs together, what tech they're leveraging, whether it's built internally, externally, kind of your strategy around that. I think it's
yeah, absolutely. Look, we're working with other sort of tech vendors in the industry. We did I think it was a social media post sort of celebrating our policy admin vendor, which is Inslee, and really kind of singing their praises. And look, my opinion on this is we're not trying to build to build tech that we then sell to other people, right? So that's not this current iteration of the company. There's a lot of really good stuff out there that we can leverage to get product to market quickly. Our edge and where we sort of think about it is sort of twofold. One is it's that data and analytics piece, and how do you bring the insights that we're getting from data that we know others are not using, and we probably won't get into that specifically in this forum, but there's a lot of new insights that we've found that through publicly available data we've paid for, that we think can help us find underwriting lift and say yes when others say no. But the important tech piece is like, how do you expose that to underwriters in real time, right? So we view kind of our edge as that, plus then the connectivity between, okay, this is the policy admin stack, this is the kind of the AMS CRM stack, this is sort of the BI data layer that sits over that. This is what we're getting from a third-party TPA. This is what we have to send to the carrier. It's the kind of connection point for us that I think is where we're trying to allocate dollars, and kind of really thinking about, okay, how do we get this to people in real time so they can make decisions? And frankly, sort of an underappreciated thing is like, how do we do this like compliantly? Right. And our carrier has a list of stuff they need. And the more we can get them access to that in real time, that helps everyone. And then how do we kind of keep adding to that? So we are, it's a partner and customize and then connect approach versus we're going to build our own policy admin stack. We're going to, build our own, claims stack. We're not at that point. I think we would bolt on. We may build some things that we bolt on that are applicable for our market. So you can envision language translation services as something that's pretty relevant, but we're not necessarily looking to go compete with Guidewire or Brightcore or Sakota, any of these folks. They've done a lot. They've raised a lot of money. They have good products. Let's just use them and use them better than others.
It takes a long time to build those.
Yeah, exactly right. He thought the
Speaking of,
capacity journey was long.
Patrick, speaking of raising money, you guys have had a recent successful fundraise with some great partners. Love the Manchester crew, and I'm sure Greenlight was involved. It sounds like another great group there. Anything you're willing to share, kind of in that process? How you put that together. How you kind of talked about. Not only from, I think with Greenlight specifically, they're probably doing some of the risk as well, but, how to help them think about, how to help investors think about opportunities in more niche areas or problematic areas that other MGA listeners might be going after.
Yeah. I mean, I think that, look, we try to very much sort of point to what we've learned from prior markets and prior cycles and companies, and sort of said, okay, this is what we learned. This is what we did well. This is what we maybe got wrong. And here's how we're doing it differently. And I kind of leaned into that quite a bit and said, as a, new company that was, going after, small commercial insurance, a lot of InsurTech V1 was trying to do that middle market. So I said, this is how we're going to do it differently. And this is what we would expect that to look like, from an outcome standpoint down the road. And then really leaned into like, here's the people that are going to help us get there, whether it's the team we've built, whether it's the brokers that we brought forward, whether it's the capacity, and sort of showed them, showed our investors how this would all fit together. And then we were very, we leaned a lot into like, what are the important metrics that an MGA is ultimately going to be evaluated on? And we didn't shy away from it, right? It's like EBITDA is important for an MGA. This is why we need to get to that position within a, reasonable period of time. And then the multiple sort of grows from there as we grow and generate more cash. So really just was very open about sort of, our pathway towards that. Obviously not necessarily locking ourselves into one path. We have thought a lot about optionality, but that was key. The other thing is we were very intentional about the cap table that we wanted to build, right? And, we have some great traditional venture tech investors. The first check we got was from Andreessen Horowitz. Really helpful, helped me incubate the company, still involved to this day. We wanted to pair kind of traditional venture tech with some strategic, support. So you mentioned Greenlight. I said Vantage earlier. Amwins is on our cap table. I mean, this is all public. And then, there's the social benefit element too of what we're doing. So we have some investors that's their focus. They're mission impact investors. They bring something different to the table that the others don't. And it's kind of the collective unit that works, really, really well. And then we have a couple of just, if I think about each round and who kind of led that, like first check Andreessen, seed round led by Mosaic, the latest A round led by IA, they all are very intentional. And you look for people that can go a couple times and sort of understand that the road isn't, as much as I put in the slide, like this is what we're going to do. It's not linear. And you got to get that buy-in from folks sort of early on. So I guess my advice would be thoughtful. Don't just take a check to take a check. If you can, certainly. Kind of keep optionality, open at all times, and then be transparent about, what you haven't gotten right before and how you're fixing it and where you're headed.
I'm going to have to send Rick a apology email. I said
Manchester
right. Instead of IA Capital.
No, we it's all good.
Yeah.
I don't know if he's listening anyways, so we'll be all right.
He would never listen.
Having 4 listeners. It's not,
hey, there we go.
That many people that can see it. So
yeah,
I would have to send it to him and say, I mentioned you in the show accidentally.
At the 53-minute mark. Yes.
Who is this? Can you, why is this not going to spam? Stop emailing me.
Yeah. Hilarious.
Dylan, there's no claims questions.
I'm ready. No, there is definitely claims questions.
Well, it's the end of the show now. Sorry, Dylan.
Yeah, well, too bad.
It's just shot.
Patrick, really quickly, who's handling your claims?
Yeah, so we're working with Sedgwick on the claim side. They've been a really good partner. We did a fairly exhaustive diligence on the TPA space, and that's where we netted out. For us, the claims are an important piece, right? Like, I think it's not only sort of the ability to understand the markets that we want to write, which is a key piece, but we spend a lot of time just looking at like how do we get access to real time visibility on what is happening, right? I think there's often a break on, particularly for MGAs that rely on, TPAs, and then you have the carrier, there's the broker, there's so many, and the insurer, the claimant, there's so many places where you can kind of lose the connection point. So we were really looking for a partner that, could give us full visibility into what was happening. Because there's nothing worse than getting a call as someone who managed distribution from a broker about the status of a claim and not knowing the status. That is a really, really bad look and an embarrassing look. And that was, it sounds simple, but that's often, can fall apart in that chain I talked about. So, that was one of our kind of big priorities. And there's also a lot of data. Again, we claims data is a big piece of how we're kind of underwriting both claims we've had, but then historical data that we've accessed, that's helping us make decisions possibly differently than others have before.
Very nice. Do you have who internally, and I see this different at a lot of MGAs, but who internally is responsible for managing that TPA?
Yeah, we sort of currently we don't have a dedicated claims person, so we would roll that up into our underwriting division right now, which is led by a gentleman named Dane Brockett, and he's working closely with them, and then we have sort of a tech data science counterpart that supports the data engineering that supports the integration, and then the carrier. Look, the carriers are very involved, right? Like they're there's biweekly status calls on claims and all that, but we roll that up under underwriting at present.
Great. I'd hit you with more, but we're running out of time. So,
and also we don't want to fall asleep.
We don't have that many claims yet, knock on wood. So,
nice.
Claims is so boring, Dylan. Ugh.
Doug, we're gonna fight. That's it.
That's good news for you, Patrick. It's quite easy for me to knock on wood in my shed office here. So.
Yeah, no kidding. It looks warm. It looks like a ice fishing hut.
It very much feels like that in February in Yorkshire as well. But look, I think one thing stands out for me, Patrick, from this conversation. Clearly, one of the most kind of I'd say dedicated visions and missions we've probably had on the show. And this question will cover a lot of the points I'm sure you've made in the last hour or so. But we ask every guest, what would you like your legacy to be?
Yeah, it's funny. We actually had a slide in our first deck, pre-seed deck, I believe it was, where some of it was a little tongue in cheek, but at the end of the day, it wasn't. It wasn't meant to be offensive to the industry, but we sort of pitched what we're doing as an industry call to action. And I referenced things that the insurance industry has done to solve complex capacity challenges before, right? So we talked about effectively why the island of Bermuda exists in the state it does. We talked about the creation of the flood program. We talked about TRIA, and we also talked about the creation of the FAIR Plan. Nationwide, and it dated back to, it was a commission from Lyndon Johnson and President Johnson at the time in the 60s around how do you bring insurance to riot affected communities, and the outcome was the creation of FAIR Plans. But the FAIR Plan really has evolved into something very different from its initial intention. The vast majority of the business in the California FAIR Plan, as an example, is nowhere close to an urban environment. It's wildfire prone. It's think about the policies and citizens in Florida. It's wealthy people on the coast. So I sort of said, let's try to solve this problem, right? Look at what happened in 2020 in Minneapolis. It will happen again. There's shades of it happening now still. We're a great industry. Let's solve this problem. And that's what I hope the legacy it would be, right? So we have identified a market. We've said it needs dedicated focus and attention, and we know we can't do it ourselves. We need the industry to come along. And I'm hopeful that, 5 years from now, this isn't a problem. Everyone's writing in this market. And then we would say, hey, we've done our job. And hopefully we've made some money for folks along the way. But that's the goal.
Yeah, I like that. That's great stuff.
Who
Patrick.
should reach out to, Patrick? We'll put some notes in the comments, but who would
Yeah,
be
absolutely.
ideal?
You can reach out to
speak
me directly. You guys can include my email. We'd love to hear from, interested brokers that, we don't know yet, retail, wholesale, we'll figure that out. We're always looking to chat with carriers. Anyone who's excited about the mission and what we're trying to do, like we can figure out a way to get you involved and help us. So, super pumped to be with you guys. Really like what you're doing, and the different aspects of how you all are touching this ecosystem it's pretty compelling too. So thanks for letting me tell our story, and hopefully if we were talking about connecting in a year, we've made sort of that incremental progress that we're talking about here.
Yeah, we'd love to have you on in the future. We're doing different in-person events, so we'll try and connect at one of those and get it.
Yeah, absolutely. Well, happy to come to you all, or if you come down here, Nashville's we can definitely show you a good time here. So
love Nashville.
Just don't come in February, I guess.
Miss the ice storms.
Yeah.
For sure.
Very good.
Patrick, buddy, thank you so much for taking some time to chat with us today.
Yeah, likewise. Thanks, guys. Thanks for your patience in getting this set up too. Talk soon.
All good, man.
Thanks
All right,
very much.
Jason. Bye-bye.
I know. See ya.
What a good guy. Good product, good guy. Hey, Peter, you got pretty close to saying none of our other guests had anything, any mission-driven purposes. Just
Flora,
FYI.
though.
I was just setting you up to say your classic line, but I stopped a step before that, thankfully. Yeah.
Well, it seems. Obviously, the two biggest ones with a real mission, I think, are his company and Flora. Which, interestingly, Christy, I don't know if I'm not sure if IA Capital invested in them, but she is a partner there, I believe. So it's just interesting that both had to tie into IA Capital and also have a very significant mission, really trying to help people.
Yeah. Another green light company. Those guys are everywhere.
They're very active, aren't they?
Yeah.
Yeah, we have to have those guys on. I don't think we've done an official episode. We did the webinar with them before we started this series.
I don't know. Seems like a lot of work, a lot of effort to get them on. They're busy people.
Now busy people. Yeah. As are we,
Brian,
maybe sometimes.
Brian.
Yeah.
Are we? I don't think so. I don't know that we have anything going on. Another great guest, guys. We just keep adding great guests of equal caliber. Don't know how we do it. Who's up next? I think we have some other great guests coming on soon.
We do. We have a little gap here for some travel. We've got Tomer coming up.
T-Dog, from Israel. Yeah, with
and
Skywatch, Boom and Skywatch. He's a good dude. I was like hanging out with him. Anyway, listen, we've got, keep listening, keep coming back. We know you want to. If we've offended you, write Dylan a letter about, I don't know, something.
Yeah, Dylan loves to receive that kind of feedback. And retroactive question for you guys, because we're recording this before Super Bowl Sunday. Who's your winner?
Arsenal.
Don't care at all, Peter.
You don't care at all? I didn't know that.
No,
I didn't know if you.
I
know nothing about it. I thought you'd be interested. Okay.
Oh no, not
American football. Dylan, this is very un-American of you.
Yeah, well,
not to.
Doug,
are you watching the Super Bowl?
I don't watch Super Bowl. I haven't watched it in years. I tell you, I did go to a Super Bowl party a couple of years ago. Watched like 4 minutes of it at the end.
Did you go just to like piss people off? You're like, this is awful. Can't believe you guys are here.
No, just hanging out with friends. So,
okay.
Yeah, I have friends. I mean, not you guys.
You do.
I hate you guys, but that's okay.
We'd be awful friends. All All right. Well, yeah. Sorry, Peter. That was a bit of a bust of a question.
That was a bit of a waste of a question. Yeah.
Yeah. Who is it?
My
It's the
co-founder of my
Seahawks.
business, Diego, will be very annoyed about that because he's a big
Seahawks
Pats fan.
and Pats. Yeah.
It is impressive they're going back to the Super Bowl with, losing their big time coach and big time quarterback and Gronk and a whole variety of others that are pretty famous.
Is he still dating that like 25-year-old?
Who?
The old coach?
I don't know.
Belichick?
That's interesting. I don't know. I don't really
Doug
care.
follows the entertainment news more. Yeah.
Good for everybody involved in the transaction, and I will call that a transaction, not a relationship.
Yeah.
Dylan, you're so jaded. It's probably true love. It's the first time either of them have felt true love.
Okay, sounds good.
Why are you getting in the way of it?
Yeah, my bad.
It's almost Valentine's Day, Dylan.
Listen, I'm sorry, Coach. My bad.
Yeah. Hey, Rob was speaking of Valentine's Day. I guess was I coming on too strong to Rob on the last episode?
Yeah. What was that comment about?
I don't know. I guess somebody
I
watched it.
I didn't catch.
I don't think it's out
didn't
yet.
see
Somebody
this.
watched it and said that are you in love with Rob? You guys a thing?
Who was that directed to? You, Doug. Yeah. Okay.
Yeah.
Interesting.
Yeah. I just said he was
Are
a
you?
good-looking guy in
Yeah.
good shape. Just facts.
Oh, true. You did spend 15 minutes on that. Yeah, true.
That's true.
Just
It's
probably
okay.
more jealous. Maybe
Listen,
want to go out for a
whether
walk,
that's a
drink
true
some
love or
water.
a transaction of him producing our show, I'm not here to judge.
We
Doug
do
corrected
get-
me.
We get a very good deal, and I wonder what we are giving in return for that.
Fame and fortune, less fortune,
Unfortunately,
probably a little less fame as well.
not very much.
I guess we're not giving much.
much fortune.
Yeah, it's too bad.
No.
Yeah, man.
Oh well.
Very
All
good.
right,
Well,
listen.
another episode
Let's,
done.
yeah, another episode down. Let's go do some real work now. We've had our fun for the day, and bored a lot of people, I'm sure, with this show.
No, that was an
Sounds
interesting one. I think
They'll
people
keep
find
coming
it.
back. People will keep coming back if we keep
By the way,
bringing in good guests.
love some ENS talk. We need to bring on more ENS people. He got me all excited about
That's
surplus
the
line stuff.
space.
I
New
find
premium
it
as well.
so interesting. I think that's and Doug, now your company's actually doing some stuff on the surplus
We
line
do all
side.
sorts of ENS stuff.
We should really focus more a little bit on some more surplus lines. Just saying.
maybe.
Some weird and wonderful products.
I'll make a
Then weird
suggestion
claims.
before we head out. Can we get when are we getting the 2% loss ratio guys on? Because that's
Oh, please
that's
God.
a conversation. we
Are
need
they
to
even
have.
in insurance anymore? I thought they made a chatbot.
Doesn't matter.
Yeah.
We need them. We need to talk to them about this loss ratio.
Okay. We need to let them know, show them all the clips of where we reference them in a row, and then be like, how do you respond?
Yeah.
Can you just ask something? If anyone is still listening at this point, very unlikely. Do the usual stuff of giving us a review on Spotify. I think you can just do the stars. Apple Podcasts, you can actually write something. Subscribe and follow all the stuff on YouTube. And if you are on LinkedIn, can you follow the page as well? Because that really helps. It helps get this
We do
message out.
appreciate
It helps us reach more people. So we really appreciate that.
Peter, there's people have reached out asking to rate the show, but I guess you can't do 0 stars. Like it has to be at least 1, and so that's why we're not getting the rating.
That's fair.
Yeah. And also, Peter, let's start with that next time. That's a great point. Good job.
So I don't like the self promotion. We don't need to do it. We don't need to.
Yeah,
But
we
Peter,
just hate,
we
we hate
should.
ourselves, but we're trying to help others. So
It's too
You're saying
unprofessional.
you're
We
saying
have a
this to the
mission.
person with his own company on his hat. Be the wrong person.
Oh man! All right, guys. All right, we've had too much fun. We'll till next week.
all right, guys.
Bye bye.